So I hope most of you have already filed your taxes because today is the deadline, April 18th, just a day after my birthday. This is going to be the case for most Americans except for Californians, however, because California actually has had their tax deadline extended all the way out to October 16th to file their taxes due to the extreme weather seen statewide this winter. So this is an extra 6 months to actually file your taxes. So usually the case goes, if you are expecting a return, you're getting some money back, it's better to just do it as soon as possible so that you can get your money now. However, if you expect to actually pay taxes to Uncle Sam, then you can push the deadline all the way out to, towards the end, October. So if you haven't really been responsible and saving up to pay your tax bill, you have an extra 6 months in order to accumulate some cash in order to pay that back. Or if you just want to hang on to your money, it's better just to pay later. And so you could keep your money for any kind of emergency or just to have it around. In this video, I'm going to talk all about the consumers. We're going to be going over student loan forbearance. We're going to be talking about credit card debt, car debt. Towards the end of the video, I'm going to be talking about the net worth of individuals in the lower class, the middle class, as well as the wealthy upper class. So definitely stick around towards the end of the video to check that out. First piece of news, Americans are struggling to pay off their car loans. Of course, we know that the Fed has been raising interest rates ever since 2022 to fight inflation. And of course, this translates to car loan interest rates. So the average annual APR on a financed new car is climbing from 4.5% in March of 2022 to 7% a year later, even after falling slightly from February. That's the highest loan rate since 2008. According to Edmunds, the leasing interest rate is about 5.7%. And you could just see with this purple as well as the blue and the yellow line here, all of the interest rates have been increasing since 2022. The blue line represents new car financing at 7% interest rate, which is super freaking high already, but that's nothing compared to used car financing, which is up to 11.4%, which is just absolutely ridiculous. If I had to pay 11.4%, I would take the bus or I would ride my bike. High loan rates means monthly payments are soaring as well. In March, the average monthly payment in financing a new car hits $730, the highest on record according to Edmunds. The average payment for financing a used car is now $556 per month, which is up $147 in just June of 2020. And the second part is just absolutely ridiculous. More new car owners are paying as much as $1,000 per month. In January 2019, new car payments over $1,000 per month made up roughly 5% of sales. In March of 2023, only 4 years later, the four-figure monthly has ballooned up to 17%. 17% of people are paying $1,000 or more a month on their car, just on their car, that's like a freaking mortgage. That's just absolutely insane. But people just love their cars. They love to live outside of their means. And so they're just taking out these loans. And if you're taking out a loan at 11%, at 7% interest rate, you can't afford to buy that car. The percentage of vehicle payments more than $1,000 a month has tripled in 4 years. So at the moment, car prices have been going up and they've been kind of tapering off a bit ever since the pandemic, but they've definitely still stayed pretty high. Interest rates have certainly shot up again, 11.4%, 7%, 5.7% for a leased vehicle. If you are looking to buy your next car, please don't be one of these people. The recession might hit, you might get laid off at your job. And so you don't want to be jumping into any kind of loan that you might not be able to afford later down the year when things start getting really bad. So definitely don't be one of these people. Buy within your means, and hopefully you can buy a used car with cash that runs well. Buy a Honda or a Toyota. I know it's not exciting, but just buy within your means. And in the next piece of news, we move on to credit card debt. So credit card debt is at a record high as the Fed raises rates again. So of course, the Fed raising rates will impact not only just car loans, but credit card debt. New York, the Federal Reserve raises rates again. Credit card debt is already at record high, and more people are carrying debt month after month. 46% of people are carrying debt from month to month, up 39% just a year ago, according to bankrate.com. And in this chart here, we can see that the household debt has tripled in a decade. So back here in 2010, the credit card debt was around $300 billion. And then it really shot up in 2010. This was during the whole financial crisis where people just really relied on credit cards in order to pay their bills. And then ever since then, it really has shot up since 2020 during the pandemic. Of course, with the whole stimulus was a decent dip that dropped from about $860 billion to about $747 billion. So a drop of about $100 billion. And ever since the stimulus checks have dried up, people are relying on credit cards more and more since 2021. And now the debt is about $966 billion in credit card debt. Banks say that the average credit card interest rate has reached 20.4%, the highest since their tracking began in 1980. 35% of US adults report that their household debt is higher than it was a year ago. Just 17% has said it's decreased. And down here, it shows a chart saying behind on credit card payments, and it shows credit card debt, student loan debt, other, mortgage debt, auto loan debt, and home equity line of credit. With the drop in student loan delinquencies, which I'll get to in the next piece of the news, credit cards account for the largest share of the household loan payments not paid. So more delinquencies are happening with credit card debt more than any other debt. So the best way to avoid getting yourself into credit card debt is not buying things that you don't need. Of course, have an emergency fund so that you don't have to rely on credit cards just in case something comes up in your life that you need to pay for. Have that emergency fund. Start with $1,000, and if you can, move your way up to 3 months, 6 months, and at the very most, get at least a year's worth of money in order to, if you lose your job, you'll still be able to afford your life for at least a year, giving yourself plenty of time to find your next job. So next we move on to student loan debt. When do student loan payments resume? So of course we know that the whole forbearance situation that happened with the pandemic, students were able to put their student loans on forbearance, which means that there's no accumulation of interest on their loans, as well as they don't need to make the monthly payments. And so there is a SoFi Bank lawsuit against the Secretary of Education to end the forbearance program, because there's a lot of people that just want to end this. You know, people want their money, right? Students may be off the hook for payments until late summer 2023, but forbearance could end sooner if the Supreme Court decides the fate of the President Biden's plan to cancel up to $20,000 in student loan debt per borrower. So when exactly will payments resume? It says here, we don't know exactly when the payments will resume. The Education Department's announcements leaves forbearance expiration date up in the air, depending on when the Supreme Court weighs in on the legal challenges circulating Biden's student debt relief plan. If the Supreme Court has not made a decision on Biden's debt cancellation plan by June 30th, then forbearance will end. Borrowers will need to start repaying loans 60 days after June 30th, at which point interest will also start accumulating again. So there's still a lot of things that are up in the air, but if I were you and if I were on this whole forbearance situation, I would be planning for June 30th as the date to begin to start paying things back, or at least interest accumulating back onto your loans. Only for me, I don't agree with it. I was the kind of student that made sure that I went to the school that I could afford. I saved up my money. I worked over the summers in order to pay all of my student fees. So I'm in the camp that if you have borrowed any money, that you should be responsible to pay that back. But of course, I know that that's not a popular opinion with all the students that are really banking on Joe Biden's relief plan to go through. And the last piece of news to wrap it all up, I started following this guy named Azul on YouTube. He has a pretty cool channel where he talks a lot about retirement. I'm way far from retirement, but I'm one of those guys that was super deep into the FIRE movement. I do want to retire early, so this is a really, really cool channel here. And so he came out with a video that had some pretty interesting piece of information. Net worth to be in the upper, middle, and the lower classes. So what he shares in this video is the median net worth of all households, this is all of them, lower class, middle class, and upper class, is about $120,000 net worth. So for those who don't know what net worth is, it's essentially all the money that you have, all the assets that you have, subtracted by everything that you owe, and that will give you your net worth, the money that you actually have. And if I go here to 4:15 of the video, he shows here that the lower class has about $6,000 net worth, and then he breaks up the middle class into the lower middle class, the middle class, and then the upper middle class. So lower middle class has about $43,000 net worth, and then it's doubled, more than doubled in the middle class, and they have about $100,000 net worth, and then that doubles again. So if you're more in the upper middle class, you have $200,000 net worth, and then if you are in the wealthy class, the upper class, you have about $600,000 net worth and above. And then later in the video, he shares that the average retiree has about $250,000 net worth saved up. So guys, definitely I recommend checking out this whole video here. It's an 8.5-minute video, so he gives some really good pieces of advice. I would definitely check out his YouTube channel and check out this video. All right guys, that's about it for the video. If you enjoyed it, definitely show this channel some love by hitting that thumbs up button, also subscribing to the channel for more videos like these, and leave me a comment down below if you don't agree with me and you're really banking on getting Joe Biden's student loan relief plan to go through. All right guys, well that's it for this video. My name is Jimmy Invest, and I'll catch you in the next one. Peace.